I am here with a very special edition of the CERN Basher co-host portion of what we do here because CERN has a theory. Now, he's had many theories. If you watch the show on a regular basis, you know he comes with theories a lot, but this is a master. I think this is supposed to be a master theory of the future of the world.
This, I think, is going to prove to be very important. This may be our most important non-Tesla show.
We could do a little Tesla just for fun. Okay, no, okay. Or we could throw Tesla in the middle, just to keep it serious.
Or we can just mention the word every now and then. Just
Tesla,
yeah,
Tesla, yeah, okay.
yeah.
All right, so this is going to be a non-Tesla show, so to speak. And it's going to be on the other subject, which people will be so shocked that you're going to talk about.
Yes. We're going to talk about, just drum roll, please.
Drum roll, okay. I can't do it, no.
The exciting topic of financial black holes.
Financial black holes. Okay.
Going to suck in the world's money, Randy. This financial black hole is going to suck in all the world's money.
Okay.
And there's a little word in front of that a lot of people will they see that and they'll shudder or they'll flinch or they'll have some reaction to it. But that other word is Bitcoin.
Bitcoin, yeah, that Bitcoin word.
And so we want to do our best today to educate as much as we can, and share this big idea that I have that Bitcoin is this financial black hole.
So is Bitcoin the financial black hole, or it's the thing that's going to suck all the money
That's right.
into itself, so to speak?
Yep. And
Okay.
I'll explain why. We'll build the case as to why
Okay.
that's going to be the case.
All right. Okay. All right.
Sound good?
Yep. We're ready to go.
So as usual, we have to put a disclaimer in front of every show.
Right.
But I redid it and made this a show appropriate today. So this is in Bitcoin terms, hodler's caveat.
I see.
Listen up, hodlers. Right? I'm dropping knowledge on this channel for educational and entertainment purposes only. His takes ain't financial, investment, or tax or legal advice. Don't treat him as such. This ain't no centralized fiat nonsense. You got to do your own research and stack those sats wisely. Anyway, it goes on.
I got it. I got it. Yeah.
Getting the point across.
Yeah, I do. Very, very good. I think that's how all legal documents should be drawn.
Yes.
Right.
All right, Randy, to start the story, we're going to go to the middle of the Pacific Ocean.
Okay.
Now, not where I was born in New Zealand, but another place,
Okay.
the islands of Yap and Palau.
Okay.
Do you know what the significance of those two islands is in the
No,
context of our topic?
I have absolutely no idea.
Well, we're just going to pause here, Randy, until you figure it out.
Oh, we
No,
are?
just,
I
just
see.
kidding. Just kidding. So you may recall that the island of Yap is quite famous for its large stones,
Oh, yeah, I have heard a little bit about this.
the rye stones that they use for money.
Yeah.
And these rye stones were used by the islanders, for a long time as money and quite successfully. And the reason that Palau is involved here is that in order to get the stones, they had to go mine the stone in Palau, which is 250 miles away,
Wow.
and bring it back on their boats, which itself was a pretty treacherous journey.
Huh. So they
Okay?
didn't have any stones on Yap.
Correct.
I see.
Yeah. So they would bring these back, and these became their form of money. And it's kind of interesting because this is actually the first predecessor to blockchain,
In many ways, I get it. Yeah.
right? The stones weren't moved. They didn't put them in one pocket or the other. They just stay there. They
Right.
dragged them those 250 miles across the ocean if they survived, put them on the beach, and that's where they sat.
And the mining, if anything, was much more arduous than, say, gold or silver. I mean, gold and silver mining might be arduous, but by comparison, holy mackerel.
Pretty tough. Yeah. So some of these stones, eventually were up to 4 meters in diameter, but they didn't really get to that point until the Europeans brought some, stone cutting technology with them.
I
But
see.
typically maximum, it might have been 3 feet across, which still would have been huge,
Yeah.
right? And so, um, it says here at the bottom, the Yapese people had to sail to neighboring island Palau and mine and cut the discs and bring them back more than 400 kilometers or 250 miles. Europeans brought iron tools, and then European ships that could carry bigger and heavier stones. And there was an Irishman, Captain O'Keefe, who lived on Yap for 30 years. He helped them mine and transport new stone discs almost 2 meters large. And the Germans, I think, helped them make ones up to 4 meters. Okay. And this caused a problem because it caused massive inflation, because now the ability to make more and more stones caused inflation in their money supply.
Yes, yes.
Okay. They used to be very scarce, and now they became very common.
Now, what about the people on Palau? Did they make any money out of this stuff, or were they just too stupid to take advantage?
Good question. I don't know that side of the story.
All right, okay.
Yeah. So a little bit of the former balance was restored in 1902, apparently, when they declared that only senior citizens of Yap had the privilege to go and produce the rice stones.
Senior citizens.
Okay? And it's probably anybody over 30 probably is considered to be a senior
there you
citizen.
go. That's right. Yeah.
Right. And so that's kind of interesting. So the similarities to Bitcoin, right? These stones acted as a public ledger. Everybody knew the history of their own village, and so this, prevented any kind of disputes. The big discs never changed their place, right? Only the owners changed. And at the bottom there, this says there's even a story about sailors who 150 years ago sailed back from Palau with one big stone, and just before they reached Yap, they were caught by a storm and the stone fell into the sea. But they told everybody what happened, and that stone was still used as a form of money because they knew where it was.
Okay.
Right? No one cared that the fact that they couldn't touch it. It was still there. It was close enough.
Close enough.
Right? Okay. So the similarities are that it's public, transparent, and a shared ledger. So little did they know that they had invented a precursor to blockchain and now Bitcoin.
Right.
They didn't need any centralized bank or anything like that. So, and the other similarity is both the rice stones and Bitcoin are mined.
Right.
And the fact that Bitcoin is mined confuses a lot of people. They don't really understand what's going on there. But with the rice stones are mined, and certainly gold is mined, which gold is kind of the best form of money we've ever had in many ways. And then also Bitcoin is mined in its own unique way. So this is a handy chart. I'm sorry that it's a little bit fuzzy. But this compares different traits of money. So we're looking at gold, fiat currency, call it US dollar if you want, or any other fiat currency, and crypto, but really we're talking about Bitcoin here.
Okay. All right. And you should have had a fourth column here. You told me I need to make recommendations, so you should have had a Yap column.
Should have.
Yeah.
Yes, that would be good. If I had the time to build my own chart, I could have done that.
Oh, yes. Okay. All right.
Sorry. Yeah, the time constraints, Randy, on preparing for the show was severely limited to me. Yeah. Anyway, so you can see the different traits of money. We don't need to go through every category, but you can see gold, was very good in terms of being interchangeable. It was durable, so non-consumable, right? It lasts standard time. In terms of moving it around, kind of moderate. If you have to move a lot of gold around, it gets pretty tough, right? But it's not so easily transactable. You can't just slice off a sliver of gold of a bar and transact with it. It's a bit more challenging. It's a little harder to secure, but at least you can't counterfeit it, or difficult to, I guess, unless you have fool's gold and you can fool somebody with that. But is limitations, as we all know. It's a physical thing, right? The other thing too, by the way, is that they find more. They mine more every year, and depending on how, if we find a big deposit of gold somewhere, that could definitely impact the price of gold.
Sure.
Eventually, when we go mine the asteroids, we may have more gold than we could, shake a stick at.
And it can go the other way, where you could run out of reserves and start having a limited amount of gold. You could
have that problem as well. Yeah. So the solution, we went off the gold standard in 1971. The solution to that was to have fiat currency. That's what most of us have lived with, and the only thing that we know in our lives.
Unless you're old like me.
Unless you're old like you might remember a time before that. And so, that solved a number of things. But the biggest one is that at the very bottom there, under sovereign, government issued, high. there's no theoretical limit to the amount of fiat currency that can be printed. And the problem is most governments have abused the privilege
Yes.
of the money printer. And we know all the stories about Venezuela and Zimbabwe and all those countries, Lebanon, Argentina. But frankly, the US government has also abused that privilege as well. As strong as our currency is, still an issue for us.
Will we be looking at the option of a metal-based, or in this case, a gold-based fiat? In other words, that was an option that we did for many, many years that was actually pretty successful. Is that better than or worse than a fiat that doesn't have an underlying asset?
Well, it's better. It would be better in many ways if countries could stick to it, and unfortunately, they won't or they can't.
Okay.
Right. Now, along comes Bitcoin, and it gets high in every category. And the one category where it's marked low, actually, that's also a positive thing. It's because it's not government issued. It's
Mhm.
decentralized. It's a global currency, just like gold is.
Mhm.
Right. And other things on this chart, by the way, is 24/7 accessibility, censorship resistant. You know, the people have been debanked.
Right.
Countries have been moved from the global financial system, like Russia has been kicked off of SWIFT. Um, um, it's also transparent. You don't need to trust third parties. Um, and then there's really, if you own Bitcoin directly, there's no counterparty risk. So
Right.
there's a bunch of other things not on this table that we throw in there in terms of on the Bitcoin column. So
So I think a lot of people wonder though about portability, because right now nobody's transacting anything. I mean, people are, but it's rare. And most people think that there's a lot of friction in terms of utilization as a currency.
yeah, we're talking about money here. So we need to draw a distinction
I
between
see.
money and currency,
Okay. All right.
right? Just like gold. Again, do people transact in gold? No, not so
Yeah.
much.
Yeah. Yeah.
But it's a very useful form of money, and it's a safe haven in times of uncertainty, as we've seen,
Okay. So this is
or times of
money, not
inflation.
currency. All right. That's
Yeah.
good. I like it. Okay.
Okay. So that's a very important distinction to make to be clear about. Yeah. There's certainly a long way to go to make Bitcoin a form of currency.
Hmm.
That may happen, but that's not going to be our focus of what we're talking about
Right.
today.
Right.
Okay. So there's growing consensus that Bitcoin is really the first perfect money, or at least it's the most perfect money that we've ever developed as of yet. Can we improve on it? Maybe we will one day. But the idea is that Bitcoin is made a big leap forward in a whole host of things. The problem with Bitcoin is it's very difficult to understand at first because it's an ideology, it's a protocol, it's an asset, it's a network, it's ethical, it's a digital commodity, it's scarce, it's digital gold, it's digital capital, it's global, it's digital energy, it's a digital economic system, it's a digital defense system, making it the world's most perfect money. And just to understand one of these things is enough, but let alone all 13 or 14 of them makes Bitcoin a very complicated thing to understand.
Yeah,
Okay.
and we talked about this a little bit on the show the other day. One of the other thoughts I think I brought it up to you was that the fiat currency is now largely digital. So do we need to revise the chart that we just looked at to show that now the fiat dollar, for instance, is more secure than it used to be? You're not carrying it around in your wallet, you're carrying it around in your phone, and therefore it is more secure in that regard, or that it is uh, easier to use in transactions because it's all digitized now. You can use it the world around without hardly any friction.
Excellent point. Agreed. Yes, you're right. The fiat currency with the advent of digital tools, also with stable coins, make transacting in the US dollar less friction, 24/7 transactions. There's all kinds of things that come with that in terms of digitizing the dollar. Yes.
Mhm. Okay.
The fact remains that it is still centrally controlled,
Right.
right? And all those issues around that.
And unlimited production. Yes.
Unlimited production is probably the big one. Yeah. Yeah. No, very good point. Thank you for mentioning that. Okay. Instead of focusing on educating everybody about all this stuff, there's tons of resources out there on the internet for those that care to understand what Bitcoin is and how it functions and all that stuff. Let's just make the leap. We accept all this, that Bitcoin is all these things, and that we have a basic understanding of that. And if you don't, the rest of this presentation might be a bit challenging, but I think it'll still be very useful for folks.
Okay.
Okay. So what's been happening is that Bitcoin started out basically with a seed. It started out as nothing. It started out really worthless. And over time, it's been monetized. People have put money into it. They've invested money into Bitcoin, and its price has gone up over time. Now, not smooth or in any steady way, but yet the fact remains that since 2010, which is about the beginning of when it started trading, I think it came into existence in 2009, if I'm not mistaken. But in 2010, we've got sort of public prices for Bitcoin that basically start not much above zero. The annualized return since then is almost 200% per year, right? And that's easy to do when you start from nothing.
Sure, sure.
Okay. Let's get past the first 5 years. The annualized return from here at the peak before the 60% drop is 51% return per year. Okay. Even in recent years, let's say the last 5 years since 2021, the annualized return is, 32%-ish a year.
So now this would probably be true of any form of money. The first person that picked up a piece of gold and tried to convince his neighbor that it was money, it was probably only worth one pizza. But that same piece of gold might be worth, $100,000 today.
Could be. Yeah, no, I think that's right. I think there have been things throughout history that humans have used as a form of money that initially were not valuable, and then people recognized it and accepted it as a method of storing value.
Right.
And therefore it becomes monetized, becomes more valuable over time. And this is what we're witnessing with Bitcoin. And to date, at a price of $117,000 per coin, I think today it's around 118,000. It's up essentially 39 million times.
Right.
Right.
Uh-huh.
So this is the process of something becoming monetized. People are putting money into it. It's becoming more and more valuable. So my theory here, what I'm here to talk about today, is this idea that we are witnessing this tiny little black hole that over time will absorb a good portion of the world's capital.
Okay.
Okay. And I'd like to share with you why.
Sure.
Okay. All right. Again, as we sit today, this asset is worth about 2.35 trillion. If we compared it to other assets that we know of in the world, it's more valuable than Alphabet, Google, and it's slightly less valuable than Amazon, depending on the day.
Okay.
Okay. And the next on the list is Apple, Microsoft, NVIDIA, and then gold at 22 trillion. So if Bitcoin 10x's from here, it becomes as valuable as gold. It's already passed the value of all the silver in the world. So it's well on its way.
Mm-hmm.
All right. And here's that chart a little bit closer so people can see it. Still, despite Bitcoin's success, it's still a tiny fraction of the world's total assets.
Right.
So if we look at that, there's about 1,000 trillion or one quadrillion of assets in the world, asset value in the world.
Mm.
Largest chunk of that's real estate, about 380 trillion in real estate. People have to live somewhere, but some of that's also just for investment purposes.
Mm-hmm.
We've got 318 trillion-ish in bonds. We've got 130 trillion in cash, 135 trillion in equities. And then we've got art, cars, collectibles, other stuff that people value, 27 trillion. We've got gold at 22 and Bitcoin at 2 trillion. So it's still 0.2% of the world's assets
Mm-hmm.
as well. Even though it's up 39 million%, it's still tiny
Right.
relative to the world's assets. Now, the reality is that the world's assets, you could put them in two camps, two groups. Half of the assets are needed for utility. We need to live somewhere. We need cash to be able to buy things that we need to buy. Companies need working capital. So about half of the world's assets are actually for utility.
Mm-hmm.
But the other half is a store of long-term value. People have earned and saved money. They put it somewhere so that they preserve the value of that money over time.
Mm-hmm.
And all those assets that we just went through, some people even make the mistake of storing it in cash because they're too scared to invest in anything else.
Sure.
Okay. But about 50-50. So we've got 450 trillion or about 500 trillion now of assets that are store value.
Mm-hmm.
Okay. So again, to this point, to survive, everyone must convert their work into assets that are scarce, desirable, portable, durable, and maintainable. If you don't, your life's work will deplete over time. And if you're in a situation where you have to support yourself in the years where you're not working anymore, then you're in serious trouble if you don't get this right.
Mm-hmm. Mm-hmm.
In past days, we relied on governments to give us pensions or companies to give us pensions. We didn't have to worry about this. But in today's quote unquote modern time, it's our individual responsibility to figure this out. So let's take a little bit of time and sort of look at the different asset options and figure out, you know, how attractive they are over a long period of time.
Mm-hmm.
By the way, most of these slides in this presentation are from Michael Saylor,
Okay.
who has his own website and all kinds of presentations on Bitcoin if you're looking to learn about Bitcoin. So I want to give him credit for these slides, including the ones we're about to cover.
Sure.
This is an interesting concept, and he calls it the first law of money. The lifespan of any asset is simply the value of that asset divided by the cost to maintain it. Gives you a rough idea of how long that asset, the lifespan of it.
Mm-hmm. Mm-hmm.
So let's go through this in some detail just to paint this picture, because I think this is a very important concept.
Sure.
Okay. All right. So first of all, look at financial assets. So many individuals and most companies use financial assets to preserve capital. So if you're in Argentina and you kept your money in the Argentinian peso, inflation is 98% over the past 4 years. So the life of this money has like a 2-year life. It's a very low useful life because of the high inflation. The
Now,
purchasing
this is
power is
old.
getting
Now
eroded.
this is a little bit old news since they've flipped that now.
Yeah, this is from a presentation like a year ago.
Yeah, yeah. So the last year
But-
they've got it down. I think they've got inflation down to 2% now or something.
Yeah. 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 Still, any inflation is going to erode the
Sure.
value just less quickly. Yes.
Sure.
And then here's the Turkish lira. Okay, 48% inflation, so the useful life is only 3 years of that currency.
Mm-hmm.
Okay, and here's the US dollar, about 14 years, because the supply of the US dollar has increased approximately 7% for the past century, which means a 99.9% loss over a 100-year time period in the purchasing power of the money.
Right.
Okay, so if you've taken your life's work and stored that value in cash, using this first law of money principle, the lifespan of an asset, the US dollar is about 14 years.
Right.
Depending on where inflation is in the short term and all that, but just over a long period of time, about 14 years. All right. Now let's look at other financial assets. If you were to put your money in a hedge fund that charges 2% fee and 20% performance fee, you lose about 4% of your assets annually. So the lifespan of a hedge fund investment is like 25 years. Okay. Financial assets. This is the treasury bond. Okay. If you had 7% monetary inflation and a 3.5% after-tax yield, then the lifespan of that asset is 30 years.
That was 7% inflation?
Monetary inflation.
Okay. Monetary inflation. Okay.
Yeah. Yeah. It's not just the consumer price inflation, but the rate that your money's being debased.
Okay.
Right. And most of us are not thinking about that aspect of it. We just look at CPI because that's what they tell us every month, but that's just part of it. Yeah. And even the CPI is monkeyed with. A mutual fund, if you're in a mutual fund that charged a 1% fee, then the lifespan of the asset by the formula is 100 years.
Mm.
Right? The cost to maintain that asset is 1% a year. It's 100 years. Okay. So all these financial assets, they constantly degrade in value due to inflation, regulation, and political chaos. Okay. And so you range from 1 year to 100 years of useful life in financial assets. Some of them obviously better than others.
Sure.
Okay. All right. But inflation dilutes the value of financial assets. And inflation, though, is not the only problem to worry about. You got to worry about tariffs and tolls and getting sued and all these things on this page. Taxes, right? Changing rules and regulations and
Yeah.
all this stuff that can happen. Competition from other companies and regulation and politics and you name it. Okay. So, according to Michael Saylor, frustration with financial assets causes individuals, corporations, and institutions to turn to physical assets to preserve their capital. Right? To eliminate some of the risks we saw on this previous page. Everything's taxed, every corner. You buy it, you sell it,
Yep.
it gets taxed. You move it, it gets taxed. Right? You inheritance tax. You give it away, it's taxed. Okay. So let's say you said, okay, I'm going to buy a physical asset. I'm going to buy a Ferrari. Well, you're going to pay insurance and storage and fuel and maintenance and more tax and depreciation expenses. That has a useful life of 5 years, according to the formula that Michael was presenting.
Okay.
Do a little better with a yacht, 6 years out of a yacht. A home. Use an example here of a $10 million home in Miami, which, by the way, is just like, a little tiny house in Miami. You're going to pay $600,000 a year in taxes, insurance, utilities, maintenance, upkeep. So it's a 17-year useful life for a property. Okay? And again, the vast majority of Americans store their wealth in real estate. It's not as good as people think it is. You could use silver, 25-year useful life. You could buy a warehouse, 40 years. Gold, 62 years. So this is pretty good.
Yeah.
Okay.
Now, all of these assume a flat valuation. In other words, that they don't go up in value or down in value. These are strictly assuming that the value stays the same during that period, and these are the costs associated.
Yeah, if there was no inflation, then the value would not change.
Right.
So it's just looking at the cost to maintain the assets.
Right.
Okay. So that's also an important point. Yeah. 62 years for gold, maybe 72 for a rare painting. Okay. But you've got to store it, you've got to insure it, you got to, restoration, transportation fees, cultural risk. The painting may not be as valued by, future generations, right? Mona Lisa, who cares? Who cares? Land, 91 years. This is assuming no increase in property assessment. Right? That's another risk, is that they just tax it more because they say the value is now higher and we're going to charge more. The oldest major real estate holding in the U.S. apparently is the King Ranch in Texas. It's been held by one family for 173 years. Okay, but that's the exception, not the rule.
Right.
Okay, and the oldest, physical asset holding is the royal family in the UK. It's been held by 7 different families for almost 1,000 years. Crown estate. A little bit of blood was shed to preserve that. Right. It helps, I guess, having military forces at your disposal, perhaps over time.
That's right. That's right.
Yeah. So physical assets again have a range of useful lives, 5 years, maybe to 1,000 if you're lucky. Okay. The problem is that entropy dilutes the value of physical assets. Right? Things are just going to fall apart over time, and you're going to have to put money in to preserve their value.
Right.
Look at the pyramids. I mean, they withstood the test of time, but man, it's a fixer-upper of an asset now. Yeah. And then, of course, there's other risks that imperil the value of property, right? All the taxes, competition, government rules and regulations, expropriation, all this stuff, lawsuits, and then natural disasters,
Mm-hmm.
right? All the issues there. Okay. Your tenants don't pay rent, or you've got to sue them to get them out, or they sue you, or there's wars that just take your property away from you because, you know, you lost the war.
Sure.
So there's risks with this.
Mm-hmm.
Okay. So I'm just trying to paint a picture that all these assets that we put our money into to preserve and store the value over time, they all have their issues.
Mm-hmm. Mm-hmm.
The way that people get around this is to diversify,
Sure.
right? You might lose your home, but you may not lose your financial assets or vice versa.
Right.
Okay. Michael is saying that the solution to the world's economic dilemma is the transformation of our capital from financial and physical to digital. Just like we've seen in the real world with music and books and everything else, it's a digital transformation. So why shouldn't we also be doing this with capital? Right? And that on the surface of it seems to make sense. And he's saying that if you hold Bitcoin with a custodian, if it costs you 10 basis points a year, then in theory that asset lifespan is 1,000 years.
Mm-hmm.
If you custody it yourself, you might get up to 10,000 years if you don't mess it up. And then he's suggesting that with AI, you might get 100,000 years if you pay the cost of electricity to preserve it and all that. Obviously, this is speculative because we don't know what the world's going to be like in 100,000 years.
Sure.
His point with all this is that digital assets should extend the life of assets in general to a longer time period. All right. Maybe if the other assets that we typically use have a 50-year average life, digital assets should extend that well beyond 100,000 years, or at least have the potential to.
Okay, I'm there. You missed me there. So I didn't make that transition. How does the digital asset impact the expenses that it takes for me to maintain a house?
Sorry. Yeah, we're not improving that. What I'm saying is that digital assets compared to the
Compared,
financial and physical
okay,
are superior from
okay,
a perspective of life of asset.
got it, got it.
Okay. Now, there's still risk there too, right? But in theory, you've reduced a lot of the other risks that we just went through with the physical and the financial assets. You don't have the same risks.
Are we going to have a list of risks associated with Bitcoin?
Well, there's certainly a few. I don't have the chart for that here, but certainly a few. And one of the big things is if you self-custody, you can mess that up and you can lose everything.
Right. But we would have the ability of governments to regulate or to tax those holdings just like we would any other holding.
Well, yes and no, but there's nothing stopping you from walking across the border and taking your Bitcoin with you.
Yeah, or your gold or your
Well,
or
it's different with gold. You have to they can physically stop you, but with Bitcoin, you can you can go anywhere in the world and take it with you, and no government can stop you.
right. Yeah.
Right. So there's differences there. There's again not without some risks or
Right.
challenges, but it's easier,
Mm-hmm.
right? You can transport that property anywhere in the world at any time, 24/7. So here's again, I think another interesting way to think about this. When the United States was kind of a startup country, we made some pretty good deals. So this is after the American Civil War, a couple of years after. We bought Alaska for $7.2 million.
Right.
How did that do?
Pretty well. Pretty well. Good decision.
The value of the oil, just the oil in Alaska, is worth about $1 trillion.
Mm-hmm.
Okay, so it's been about a 7.8% return over 157 years. Okay, that's been pretty awesome. All right, 139,000x gain.
Yeah.
The French in 1803 sold Louisiana to the U.S. for 15 million.
Mm-hmm.
Okay, Napoleon was fighting for the old world, and Jefferson was growing in the new world.
Mm-hmm.
Right? Napoleon probably squandered this $15 million pretty quickly, and this ended up being a pretty awesome deal for the U.S. It accounts for about 27% of the lower 48.
Mm-hmm.
Okay, which is today probably worth 12-ish trillion. 800,000x gain, 6.3% return for 221 years.
Mm-hmm.
Okay, and growing.
Mm-hmm.
So to your point of, yeah, there's probably somebody that paid a whole bunch of gold for a pizza,
Mm-hmm.
right? If you can get assets that have appreciation potential, growth potential over a long period of time, yeah, what you paid for them in the beginning looks ridiculously cheap. And the most famous one is the Dutch buy Manhattan for 60 guilders,
Right.
right? The natives sold the greatest port in the New World to a country that understood naval power. So the natives didn't see the potential of that asset,
Mm-hmm. Mm-hmm.
right? They just wanted the beads and the trinkets and
Sure.
right. And that now is worth approximately 2.1 trillion. It's been a 10.5 billion X increase,
Mm-hmm.
6% for almost 400 years. So the opportunity for new assets to appreciate in value by unfathomable amounts has always been there.
Mm-hmm.
And what I'm saying is that Bitcoin is potentially another thing. And Michael Saylor likes to say Bitcoin is Cyber Manhattan.
Cyber Manhattan.
Okay.
Well, so far he would be correct.
Yeah.
No.
Right. So the point here is, well, here, so all those other assets that we looked at have an annual cost in the sense of those maintenance costs.
Mm-hmm.
So let's say we take the 450 trillion of the assets that are store of value, and let's say it costs 3% per year in terms of the annual dilution or the annual cost to maintain them.
Mm-hmm. Mm-hmm.
That's an annual cost of 13.5 trillion per year. Okay. And what Michael's doing is if you slap a PE multiple of 20 on that, then that gets to if you could fix this, that would get to a valuation of 270 trillion
Mm-hmm.
if you could come up with a way of fixing it.
Mm-hmm.
All right. And of course, his fix is Bitcoin. He says we can fix this with Bitcoin. Therefore, Bitcoin, in theory, could be worth $270 trillion.
Mm-hmm.
Okay. Right. So the economic benefit to the world of digital capital is more than 10 trillion annually. And this previous example was 13.5 trillion. All right. So here is what Michael's saying by 2045. What the picture that we looked at previously with Bitcoin was 2 trillion. If it's now worth 280 trillion, I don't know where the extra 10 trillion come from. We were just talking about 270, but what's 10 trillion at this point? If Bitcoin is worth 280 trillion at that point, then how does everything else look? Well, they've all gone up too.
Mm-hmm.
Okay, so we're at a 4 quadrillion asset value in the world by 2045. But here's the numbers behind it. Well, we'll get to there in a second. So what he's saying is that this is a forecast, by the way, made in 2024. So we are now a year into it. Bitcoin back then was 65,000. Today it's 118,000. And back then the market cap of Bitcoin was 1.3 trillion. Today we're about 2.3.
Mm-hmm.
And he's giving his bear base and bull cases. And that as a percent of assets, Bitcoin by 2045 in the base case is about 7% of global assets.
Mm-hmm. Mm-hmm.
Could be as low as 2, could be as high as 22.
Mm-hmm.
Okay. And you can see what the annual average return would have to be to get to the bear, bull, and bear base and bull case. 21% in the bear case, 29% a year in the base case, and 37% a year in the bull case.
Mm-hmm.
Okay. And here's the table. So Bitcoin goes from back then 1 trillion, today it's at 2 to 280. That would be 7% of the world's assets and an annualized return of 29%. And again, you'll note every single other asset here is appreciated in value. The biggest chunk comes out of bonds, which previously were 1/3 of world assets. Now he has them going down to 21% of world assets.
Mm-hmm.
So the bond market is in the sights of Bitcoin for sure. Okay. But real estate drops from 37% of the world's assets to 34. He thinks equities continue to increase. Again, this is a nod to AI and the things that Tesla is doing to bring
Mm-hmm.
Tesla into this conversation. right? You still need a certain amount of cash to fund expenses and for utility purposes. Gold sort of gets cut in half from 2% of world assets down to 1%. And art and collectibles and that stuff maintains its 2% share.
Hmm. Hmm.
But look at the performance difference of Bitcoin versus
Sure.
all the others.
Sure.
Okay. Now he says that this would be 28.5% annualized return for Bitcoin, but it's not going to be a smooth ride. It never
Right.
is.
Right.
Right. But over a long period of time. And he's also saying that the returns he expects, initially could be quite high and they'll trend down as Bitcoin becomes a larger and larger asset.
Sure. Only
Right.
make,
And
only makes sense.
only makes sense. And then also the volatility as well, right? It's much
Sure.
harder to move a big asset than it is to move a small one.
Mm-hmm.
Right? It's like turning a big ship. You have to plan, a mile ahead before you can turn the thing.
Sure.
But still, the volatility perhaps still higher than, the S&P 500, even 20 years from now. Okay.
Yep.
And again, these are all Michael Saylor's
I
projections.
understand. I understand.
Okay. So one of the questions that people often will say is too late. Look how well Bitcoin's done. Right. And Michael Saylor's retort to that is it ever too late to harness fire? Use the wheel, right? Learn English, learn to fly, install electricity, get a computer, get on the internet, go to space. All these things still make sense. So it's not too late.
Shouldn't one of those learn to prompt? I mean, come on, we got to bring these things up to date here.
Good point. Yeah. Yeah. Well, he wrote this a year ago. We'll cut him some slack. Yeah. So to paraphrase, or Satoshi Nakamoto, who is the so-called inventor of Bitcoin, no one knows for sure who invented it. There were definitely a team of people that were working on different ideas. Satoshi's kind of the guy or the group that came together to put it all together in kind of one package. To take what the people on the island of Yap did all those years ago, right, and create a digital version of a public ledger, etc. So his comment was it might make some sense just to get some in case it catches on.
Yeah.
If enough people think the same way, it becomes a self-fulfilling prophecy.
Yeah. So there was a guy on the island of Yap who picked up a pebble, and he was really good at carving. And he picked up this piece of whatever it was, and he trimmed away and made it into something that would look like a coin today. And he convinced his neighbor to take it as money in exchange for something.
Yes.
And it might have been a pizza.
It might have been a coconut or a fish in those days.
Or a fish.
Yeah.
And that was the beginning of that currency. And it is the belief of his neighbor that there was value in that thing that allowed him to make that transaction, that he needed to convince his neighbor when he wanted to use it to as a dowry for his daughter, that it had some. So it's a matter always, I think, with any currency, it may have all the benefits and disadvantages that are listed previously, but the key is to convince your neighbor that there's a value so that a trade can take place.
That's right. Now, again, money, not currency.
Yes, money.
And maybe the better example is the guy had fish and he wanted coconut,
Right,
but the guy that had the coconut didn't want any fish at the time.
right.
So if you create some form of money, then you can make that transaction so that the guy accepts the money and then later he can use that to buy fish.
Right.
That's kind of where this comes in. Otherwise, bartering gets tough if you're involving, more than 2 or 3 people.
Right.
Right. If you have a society of hundreds or thousands, it's impossible.
We've even had companies over the last 20, 30 years that have tried to set up online bartering because now we had so much of a wide open market to do that in. They didn't work either.
Yeah. So the way to think about this is Bitcoin is just that next improvement on money. We've invented a better form of money, the most perfect form of money we've ever invented, taking everything that we've done in past history, right? And there's also a layer of security built into it that is not present with fiat money, not present with gold. But with Bitcoin, it's both the money and security and a whole host of other things all built in. So my conclusion with this is that we've got the old system, this fiat money world that we all know has its problems, that could be supported a little bit or improved upon with stable coins and digitizing the dollar. But at the end of the day, we still have the fundamental issue that the government is abusing its privileges to print money. And it's debasing the value of our hard work that we store in assets. It's debasing that.
Mhm.
Instead of inflation being the hurdle rate, it really should be the rate at which money is printed, which is a much higher number than CPI inflation. Right? And very few people are focused on that debasement rate. They're all focused on CPI. And you feel good if you invest in bonds and get 5% when inflation's 3%. It's like, oh, I'm making money. But you're not if debasement is more than 5%. You're getting diluted out of the value of your money.
Right.
Right? Just like you would if you had a stock, if you had Tesla stock and they suddenly issue, a billion shares, the value of what you own in Tesla goes down.
Sure.
Okay. Unless, of course, that dilution happens to be Elon's new CEO, compensation package.
Right.
And you
Which
may
might
say,
be
well, he's going to add so much value, I don't care. I'm okay with that dilution,
yes.
right?
Yeah.
So what we have now is this battle between an inflationary fiat currency and this deflationary Bitcoin. And for the reasons that we just covered, I think that Bitcoin is this black hole that's getting bigger and bigger and bigger, and it's going to suck more and more capital into it. And as crazy as those numbers that we saw from Michael Saylor projecting Bitcoin become a 280 trillion asset in 20 years, I actually think that if this black hole grows the way it could actually be far larger than that. But let's just accept Michael Saylor's numbers 20 years from now. That would be a sea change in the world. And you would want to own at least some of the fastest growing asset in the world. Not necessarily sell everything else, but would you really want to miss out on the one that's growing at, 20, 29%, whatever it ends up being?
Right. Right. Yeah.
And I've taken this a step further that maybe we'll discuss in another show.
Mhm.
What does this mean for companies, corporate finance, and what does this mean for investors? In short, it changes everything.
Yeah. Yeah. Well, clearly, yeah, if it has already changed stuff. And clearly the bigger it gets, the more it'll change things. Yes.
Yeah. And the reason I say this is a black hole is because of this. The work has been done. Bitcoin has been built.
Right.
The Bitcoin network, it's flowing, it exists. And there's no off switch. There's no off switch. No one country can destroy Bitcoin at this time because it's global in reach. Right? So it's reached this criticality. It is a black hole. The question is, how quickly is it going to suck up capital?
Is there this is kind of off course a little bit, but just a curiosity. Is there anybody estimating when all the Bitcoin will be mined?
Yes, that is a known number. I don't know it off the top of my head. It's mathematically determined, essentially, plus or minus a little bit.
Is it years from now? Is it 10, 20?
Yeah, it's another 100 plus years, but the amount that gets
100
mined
plus
is
years. Okay.
yeah. I mean, every 4 years it gets cut in half
I see.
in terms of that rate. So there's a long tail to it.
I see. Okay.
Yeah.
Because of the cutting in half part. Yeah. Okay. Yeah. So the obvious question, there's two obvious questions that are always raised. And they seem obvious on their face, and yet they're not. So the most obvious one to me is, and the one that Bitcoin would make a claim to, is that if this was the underlying currency for a country or for the world, but let's just say for a country, that 50% of the reasons for inflation would go away because we cannot add to the money supply. So the only other reason, the financial definition of inflation that we all agree on right now, most of us, not everybody, but almost everybody agrees, the reason for inflation is either printing money or it is what happens in terms of productivity. Productivity goes down, inflation goes up, productivity goes up, inflation goes down, or goes to negative, goes to deflation. So has anybody come up with any thoughts with regard to what else might happen in an economy where we eliminated one of the possibilities, but we still have scarcity. We still have we'll have a very much of a changing economic situation coming forward, where Elon has suggested, in fact, that the very definition of an economy will change because of AI and robotics. Is there anybody thinking that far out and starting to impose a fiat versus a digital currency on those kinds of futures?
Well, first of all, to answer your previous question, it's estimated to be 2140.
Okay. I'll be gone.
But 99% of all the Bitcoin will have been mined by 2035.
Okay.
But there's a long tail, and the rest of it will be mined around 2140.
I see.
Okay. Now, just as a quick side note, there's already been a lot of Bitcoin that's been lost. So this whole idea of 21 million, we're not even going to be close to that. There may only be 15 million in total.
When is that?
Once you account for all the Bitcoin that's been lost, because people have screwed up storing this stuff.
Right.
Okay. All right. It seems clear to me at the limit that fiat currencies are going to print themselves out of existence. Just like many nations in the Pacific once used seashells as a form of currency. Well, when you have a superabundance of shells, the money is worthless.
Right.
So at some point you move away from that because it doesn't make any sense to use seashells as currency anymore. Right? Or in the case of the island of Yap, you bring in more stones.
Right.
The Germans bring in these massive stones and just completely, inflate the value of the currency away. That's what's happening to fiat. I have sort of theorized that once AI really kicks in and we get the deflationary force from AI and job losses too, by the way, that governments are going to want to print money to give their people money to live off of, but also to sort of stave off the negative effect of having all this debt in a deflationary world that becomes harder and harder to pay off. So they want to have enough inflation so that the value of that debt doesn't become a bigger and bigger burden.
Sure.
How all that plays out, I don't know. That's kind of a scary thing. But what Michael Saylor is talking about, at least for the next 20 years, that we have a pretty nice coexistence between Bitcoin and all the other assets. Right? He's not out there forecasting the demise of fiat currencies. Right? And another way of looking at it, perhaps, is instead of thinking of Bitcoin as a currency, think of it as a store of value that didn't exist before.
More like gold.
More like gold. Or you could say, let's say we never had real estate. And now we've invented real estate. Well, that doesn't threaten the dollar. They're two different purposes, right? One is, an investment, it's a property. The same thing now too. We've invented another asset that doesn't really necessarily threaten the dollar.
I can think of one that maybe people would get, which would be URLs. So we invented websites and web property. And so we created this thing called a URL, which is the address for your property. And that URL didn't have any value in 1995, but by the year 2000, some of them were worth $1 million or millions.
Good point. And we still have, books, right? Books haven't gone away. In fact, we probably sell a record number of books today than we ever used to. But now there's more information on the internet.
Right.
So we still have fiat, but now we're going to have something else that's going to attract capital that treats your capital better than anything else in the current system. And I've always said, and this is not my saying, but money is going to flow to where it's best treated. And if you're trying to store your money for your future use, for your family's future use, if you're thinking about multi-generations, again, per the slides we just discussed, where are you going to want to put it? You're going to want to buy as many Ferraris as you can? No. Are you going to want to store that in bonds? No. You want to put that in real estate? Probably not. right? So now we have an alternative that treats your money better than anything else we've ever seen. Right. Again, not without its own set of unique
Sure,
risks.
sure,
Like
sure,
if you're doing this yourself, if you're self-custodying Bitcoin, you better make sure you don't screw it up. Just like if you're self-custodying gold,
sure,
you could mess that up too, and
sure,
somebody could find it and just take it from you.
sure.
So those are risks that are out there for sure.
Okay.
Um,
And the other one, I was actually talking to a neighbor of mine who sells real estate for a living just this morning, and the subject came up, and he said, so the other issue for Bitcoin, and he has some Bitcoin, and he says the other issue for Bitcoin is the volatility, which I agree with you will reduce over time. The
yeah,
more of it and the more people that are involved, the volatility will reduce. But at least in the near term, the volatility is extreme. And tied to the volatility is that question of my neighbor says it's valuable, but I don't. And if enough people, if there was a rush of judgment, enough people decided it's not valuable,
yeah,
then you could have a complete meltdown of the concept. I think
you
that
could.
I think we do exist in a world where we've seen that. So a Tesla used to have an extremely high value to West Los Angeles liberals. I mean, I'm not being mean. It's just
Yeah,
true. I lived
right.
in West Los Angeles. I still only live 50 miles from West Los Angeles, and I have a home in West Los Angeles. So Teslas used to have a very high value to West Los Angeles liberals. Now they don't. And it has nothing to do with whether the car is less cool. In fact, it's more cool.
Yeah,
It has only to do with the emotional attachment or lack of emotional attachment that has happened because of shifting sands of Elon Musk's personality or the value of greening the planet, etc.
yeah. And let me just address this then by going back to here. So Bitcoin has been horribly volatile, but who's complaining?
Yeah. Oh, so far, 100%.
Yeah, right. So there's been three times when the drawdown has been extreme, minus 60, minus 74, minus 64%. This, by the way, is not unlike many companies.
Yep.
So if you're comfortable investing in Microsoft or Tesla or other companies, you've had these kinds of experiences too.
Or the whole S&P.
The whole S&P even. Yeah, many times the S&P has dropped 50% or more for the whole S&P.
Right.
So part of this volatility is a function of it. It's a new asset and it's being monetized. It started out as nothing and now it's a $2 trillion asset. As the asset gets bigger and bigger, the volatility will come down. To your point about people can change their mind. Well, this is exactly what's happening now. This is why this asset's doing so well, is because people are seeing that their money is not being treated very well in the fiat world. Governments are debasing their currency, and people are saying we need to find something else that works. They look at real estate, they look at bonds, they look at stocks, and they allocate appropriately, but increasingly, more and more people are choosing to allocate to Bitcoin.
Right.
So you're worried about that flow going the other way. Well, it certainly could, but why over the long term? Unless something's changed with Bitcoin, it makes it less appealing,
Yeah,
right?
I'm not even talking logic at this point. This is purely
Yeah,
emotion, and you can get a high profile individual. You have high. You know, as everybody knows, a rock ribbed Republican. And I'm really impressed by the current cabinet. I don't think we've ever had a better cabinet, and there isn't a single individual in the cabinet that I'm not impressed with. And yet, several members of that same cabinet come out on a regular basis and talk about solar combined with battery as a terrible solution for our existing energy problem.
right.
And I'm going, what are you even talking about? But
Yeah,
that voice right now, that emotional voice is carrying a ton of weight. And so we could see leadership at some point that might say, right now we've got leadership that's saying, hey, Bitcoin is the way to go, or that cryptocurrencies are the way to go, that have just made legislation that it's favorable to the entire range of products. But that could be the next administration could have Gensler, back in power, and we could be going the opposite way.
Well, I mean, look at the progress that Bitcoin made during that period when it wasn't treated so favorable.
Right.
I would say that those are voices shouting in the wind. We have, famous comments by Warren Buffett. We have famous comments by the head of the EU. Bitcoin is rat poison and this and that and the other thing. That hasn't mattered. People are smart enough to figure this out on their own. They're smart enough to see how their capital is being treated by the so-called authorities, right? And the government may not have our best interest at heart. And so people are taking it into their own, own hands, their own responsibility, and making sure that they, for their store value assets, to invest it in areas that will treat them the best.
And so to take your side for a minute, people are still buying Teslas, even in West Los Angeles.
Yeah.
And they're lined up around the block to go to the new diner.
That's right. So there's public sentiment, there's rhetoric, there's all these winds, those noise that we're in. But the fundamental thing is, and again, back to Bitcoin, if we have truly invested a more perfect money, then it is a black hole that'll suck up all the imperfect forms of money.
Right.
And the costly forms of money and the mistreated forms of money and all that stuff. It'll flow to where it's best treated. It's kind of a law of nature in that sense. And I don't care whether any prominent person doesn't like it. It probably means they don't understand it, or it means it might threaten their existing system of control and power that they have.
Of course. But that is a real risk.
Well, it is, except the fact that this is not controlled by anybody.
Right.
This is a way to actually take money out of that system of control and influence and put it into a parallel system that's not going to be really impacted by that.
I know that you probably don't want to put a number on it, but I have been suggesting, and maybe we even did talk about this one time on the show, that for the average investor out there that has 50 or 100,000 or more in a portfolio, that at this point something at or around or under 5% would maybe be a reasonable amount of money to put into an asset like a Bitcoin.
Well, I would think about it this way. I mean, the easiest answer is to say invest money that you can afford to lose.
Right.
If you want to protect against the downside first, right? It's kind of like if you go gambling in Vegas, only take the money you can afford to lose.
Right.
Now, I don't think this is like gambling in Vegas, but at a minimum, that's maybe the way to think about it. The other way to think about it is to say, okay, if Michael Saylor is right, and Bitcoin goes from a $2 trillion asset to a $280 trillion asset. So what's that, a 14x? No, 140x.
140x.
Okay. So invest the amount of money that if you multiply that by 140, you'd be happy with. So let's say you want to end up with $1 million, divide it by 140, and that's what you should invest today. That would be another way to approach it.
Right. And that might be an age-related thing, more risk in the 20s and 30s and less risk in the 50s and 60s or whatever. Yeah.
Could be.
Yeah.
Although even those people that are older, if you're thinking about multi-generational, then it's not so much tied to your age, but maybe just what your objectives are for your family.
Right.
Again, none of this is financial advice. Part of it also depends on your situation in terms of your income needs relative to your assets and all that stuff. But what I'm here to say is I think that we're witnessing something that is what I would call, and again, I'm using very strong words here, it's a black hole. It's going to absorb capital because it is superior in many, many ways. Yes, it has its risks, but everything has its risks. And it's suitable, I think, for part of your portfolio. And it's up to everybody to decide what's right for them.
Right. Hey, very good. Very fun hour. And hopefully people will comment below. Let us know what you're thinking about what CERN has proposed here, his basic theory of the black hole, the monetary black hole, not the currency black hole, the monetary black hole absorbing other assets as it moves through the universe. And this ties in, of course, to our entire, if people don't understand it, I'm just going to say it again. The reason that we're writing the book, and CERN is part of the book, the reason that we're writing the book on AI is because the thing that we talk about on this channel and that I've written 2 previous books about is Elon Musk and Tesla. And Elon Musk has stated that Tesla is now an AI company specializing in robotics. And therefore, if that's the case, and I assume that since he says it is, that we need to make sure that we're getting a piece, at least a piece of what we talk about on this channel is about AI. And there's no question that fiat currencies and blockchain are a part of that story.
They're a big part of that story. And maybe in a subsequent episode, we can talk about that relationship and also this notion of, or the discussion around how Bitcoin is going to change the world of corporate finance and probably faster than you may realize.
Yeah. Yeah. Hey, CERN, again, as always, thanks for coming on and clearing up some of our understandings about Bitcoin. And I'm hoping that people, again, comment below, let us know whether you like this particular program and like to see more like that. Any last shout out or anything? You got anything left?
No, thank you for the opportunity. It's been fun.
All right. To all of you out there, it has been great, as always, talking to you.